Hello friends, today I will try to explain presumptive taxation. It is a form of tax, it is a type of tax where presumptions are made regarding the base of income or the base of taxation. Every government levies tax, and for tax levying some base of taxation is decided. An act is passed, some rules are decided, and the taxpayer has to follow the act, follow the rules, write the books of accounts, find out the profit or the turnover, and according to the rule book, well, he will have to pay the tax. This is called as rule-based taxation. And it is very apparent, very clear that a long procedure is required to be followed by the taxpayer. The procedure includes maintaining the books of accounts, preparing the final accounts, applying the provisions of the law, and then deciding the taxable income. Well, many times the rules and the provisions in the Act are complicated. Their interpretations are different, and therefore there is always a difference of opinion between the tax authorities and the taxpayers. Therefore it becomes complicated, it becomes time consuming. For taxpayers it is costly, and for tax collectors also this becomes time consuming and costly. Can there be any solution to this? The solution is in the form of presumptive taxation. In this type of taxation, well, a base is decided and the rate or the amount of tax is decided. For example, in India, for construction business, 8% is the rate of tax fixed for the amount collected by way of construction. So 8% on construction receipts is the presumptive rate of tax. For retail traders, well, it is 5% on turnover. Whatever may be your turnover, just apply 5% rate and the amount is the amount of tax. Or for the transporter, if the transporter owns one heavy goods vehicle, he has to pay 5,000 rupees per month as the tax. If he doesn't own heavy transport vehicle but other vehicle, in that case he has to pay 4,500 per month as the tax. This is in short presumptive taxation. So the base is either the turnover, the gross receipts, or the vehicles, number of vehicles owned, or the area of land that you own, or it may be in the form of value of the land, or it may be in the form of a type of business. This is the base on which some rate is fixed, some rate is applied, or some amount is fixed, and that becomes the tax liability. It is as simple as this. In India, this type of presumptive taxation is optional. It means the taxpayer has a choice to accept this optional presumptive taxation, or he can maintain his books of accounts, find out his profit, and on that profit he is free to pay the tax as per the provisions of the law. So this is optional. And the benefits of this type of taxation are very, very easy to understand. The first benefit is that this method of presumptive taxation is easy to follow, is not at all complicated, is not at all time taking. Taxpayer can easily identify what amount of tax he is required to pay. He can plan his business accordingly. The government can also estimate the tax receipts in advance more accurately. The exchequer has to pay less for tax collection machinery, the expenses are less, the time required for assessment is less, and it is not at all complicated. It does not lead to any sort of differences of opinion regarding interpretation of the law. However, there are some limitations also of this method of taxation. The first limitation could be that for a particular limit of turnover or gross receipts, you will have to give some sort of exemption. For example, for retailers, well, say for 1 crore of turnover, there will not be any tax. If such type of concession is given, exemption is given, then the taxpayers would try to disclose their turnover only up to that limit, and they will hide their turnover or shift the turnover to another firm, another, I may say, organization, and they can avoid the tax. So this is one limitation. Second is, you cannot apply presumptive taxation to all types of business. This can be applied to limited types of business. Like as we have seen, it could be for contractors, it could be for retailers, it could be for transporters. You cannot apply it to all types of business. If the taxpayer is able to hide his source of income, then well, he may not be, covered in the taxation net. The politicians, the people, the party in the government, in order to please some types of taxpayers, may keep that business out of tax net. Further, those who are small taxpayers will also have to pay the tax under this particular method. Though these are the limitations, for certain types of business or for a limited turnover, this presumptive taxation is successful all over the world. Hence, many countries have adopted this presumptive taxation partially, like India. Well, friends, this is something about presumptive taxation. Let us meet next time with some other concept. Till then, goodbye.